All right, it is Wednesday, which means, of course, Mike Giordano, Money Mike here from Williams Wealth Management. All right, we're going to do a little Mike on the Money today. Many of you may have recently retired or you may be nearing retirement. If you are retired, please let me know how that is. I think I still have a little ways to go. But we're going to walk through how to successfully make that transition into retirement. So is there a period that, Mike, you find most important when it comes to retirement planning?
Yeah, there really is, Rashad. I mean, my uncle used to fly these big 747 airliners, and he would always tell me, the critical junctures of a flight are taking off and landing, right? So same thing with your investing. Those are two big major areas. Obviously, taking off is getting your money going, start investing, get the process going, get the momentum building, and then landing the plane, though, is what we're talking about here with retirement planning. And it's so vital that people understand how to land the plane, and it's a completely different experience than there when you're at cruising altitude and you're able to just keep funding. And so that 10-year period, 5 years before you retire, 5 years after you retire, that's the window that is so critical.
All right, so using that plane visual, which buttons do we need to press and prepare before we get ready to land into retirement? What do we need to consider while we're in the air?
Well, nobody's ever let me in the cockpit, so I have no idea what the actual buttons look like. But no, when you're thinking about retiring, let's say in the next 5 years before 2030 hits, you got to start thinking about okay, the first thing is, what's my vision? What do I want to do in retirement? What kinds of hobbies do I want? Clubs? Where do I want to travel? All those kinds of things. That will help you start to figure out how much money is it going to cost to fund my daily and yearly lifestyle in retirement. Once you have that figured out, then you want to start looking at your assets. Look at the financials, figure out what kind of money am I going to get from Social Security? Do I have any pensions, any annuities? What do my investment accounts look like? And oftentimes I find people don't really understand, how do you turn that savings into income? If you got $1 million or $2 million in retirement savings, what does that actually translate into sustainable income that I can draw off of year in, year out? So those are the big considerations you're trying to think through, and then you're trying to figure out, do I need to slow down my investing? Do I need to figure out a different type of strategy so that I don't have so much volatility as I'm trying to land the plane?
And how can the experience be enhanced? You don't want retirement to be overworked and overwhelmed when you're thinking about all these things that you have to sort out. But once you get to a good spot, how do you really enjoy retirement?
Yeah, so once you've retired, this is a case of, one of the beautiful things about life is that as you go through life, there's always new experiences, right? And so even there's new experiences for a retiree. They might not think of it as beautiful as I'm thinking of it right now, but for all of these decades, you've been funding, putting money into accounts. So even if the market has a setback, you keep funding into it, and that kind of dampens a little bit of that volatility. Once you retire, now all of a sudden you're not funding anymore, and now you're starting to pull money out. So you have a reverse process, and it's a little bit jarring at first that you're seeing money coming out of your accounts. It's okay in markets like today where it's pretty stable, the markets keep moving up. But if you get in markets that are more difficult, you're seeing sharp declines. Now all of a sudden, the decline plus money taking out, that's a double whammy to the downside, and that is a really jarring experience. And this is why it's so critical to have a better understanding of your strategy so that you're not taking undue risk and taking on more volatility than you would like.
And would you say age is a factor when it comes to retirement as well?
Yeah, age is certainly a factor. I mean, the biggest and the most obvious example is if you're retiring earlier, you have more years to fund, right? So if you retire in your early 50s, you might have a 4-decade retirement versus somebody that retires in their mid-60s, 70. So that means more years. You probably have to be a little bit more judicious in terms of how you're taking the money out to make it for those 40 years, to make sure that it's sustainable, have that confidence level. Beyond that, though, the earlier you retire, the less access you have maybe to some other types of benefits, your Social Security benefits, Medicare, potentially pension benefits. So you have to think through different strategies. You have a certain strategy of where am I going to get my money prior to receiving those benefits, and then where am I going to get my money afterwards. So you have a little bit more to think about.
All right, Mike G, thank you. We'll catch up with you again next week.